Thanks very much. It's a great honor to be here, invited to the MacGill Summer School. So thanks very much, and to be amongst such distinguished speakers. And I'm proud to say this isn't the first time I'm in Donegal. I spent some time around the Inishowen Peninsula earlier this year, and can now claim to have been from Malin Head to Mizzen Head. So I'm enjoying it very much. The topic for the panel is rather wide-ranging, and I thought I'd limit myself to just a few things. I'll talk about some selected key achievements under the EU-IMF-supported program, remaining challenges, and the strategies to deal with them. Unfortunately, I won't be able to do justice to all the achievements under the program in the time allotted, but there may also be a couple of challenges left that I just won't be able to cover. It's late in the evening, and it's not easy to focus on economics, so I thought I'd give you the bottom line now, and then you can wake up for the conclusion again. The bottom line is keep the momentum. Why? To ensure that the benefits of all the efforts and sacrifices made so far are secured, and to put Ireland on the path for a sustained recovery. That's really the objective. So in the remainder of the talk, I'll illustrate this point with respect to sort of three broad areas. First, the macroeconomy. Second, the financial sector, which is so important for the economy. And then third, for the public finances. So, on the macro situation, in the first 2 years of the program, cumulative growth has been fairly close, actually, to what has been expected, and that may be somewhat surprising. But there have been lots of data revisions recently, and what has growth been doing in relation to its expectation. So I looked at the 2012 GDP number and compared it to the 2010 GDP number, and compared how that relates to what we had expected. So what we had expected in 2010 when the program was designed, so that's like 2.5 years ago, we thought that 2012 GDP would be 2.8% higher than 2010 GDP. In actual fact, it turned out to be 2.4% higher. Now that's pretty close, and it's particularly amazing given that trading partner growth, which is so important for Ireland, has actually only been half of what was expected at that time at the end of 2010. So it really is quite an achievement. So now what are the current prospects? Recent national accounts data show weaker economic activity in the first quarter, and we know that quarterly data has some issues, and there's also some tension with more high-frequency data that have been more positive in the housing and labor markets, for example. Overall, we expect positive growth this year, modest perhaps, as the external environment improves and the domestic economy stabilizes. But nevertheless, we'll be monitoring developments quite closely as there have been these diverging signals in the data. So the key challenge over the medium term for the macroeconomy then is to promote a sustained recovery amid ongoing fiscal consolidation and private sector deleveraging. And that's not easy. Because both of these factors constrain spending and limit growth, but unfortunately are unavoidable in the restoration of the economy. Recent growth, especially in 2011, has been export-led, benefiting from early competitiveness gains and favorable developments in sectors that dominate Irish exports. And the slowing of growth in 2012 was a wake-up call that with weakening exports, it is now important that a sustained recovery in Ireland will also have to rely on a recovery of a job-creating domestic demand. So what's the strategy to get there? How do we achieve that revival? Well, already the fall in domestic demand has slowed down from 3% in 2011 to 1% in 2012, and we are expecting domestic demand to be broadly flat in the current year. And for next year, we expect modest domestic demand growth, though that depends on a few factors coming together sufficiently to outweigh the drag from fiscal consolidation, and these are three. First, in Ireland's case, a broader external recovery is a vital ingredient for the domestic recovery because it's a small open economy. Second, continued stabilization in employment and house prices would support income and net worth, and the sense that the crisis is being overcome would help to reduce precautionary savings. And then thirdly, the third important factor for that domestic demand recovery is perhaps the most important one, which is completing the repair of the financial sector. Banks' lending capacity needs to be improved so that they can meet the working capital and investment needs of small, medium enterprises, and also the mortgage financing needs of the younger, less indebted cohorts of households. So the critical factors are for banks to work out their very high non-performing loans and to improve their profitability. Which brings me to the second part of the talk on the financial sector. It's stating the obvious, but Ireland's crisis was first and foremost a banking crisis related to property prices. So dealing with the financial sector was at the core of the EU-IMF supported program. And there have been considerable achievements in this area. I'd like to highlight just two key aspects. One, the recapitalization of the banks, and then second, their subsequent shrinking and reorganization. So on the recapitalization, at the end, I mean, we have to remember back, how critical the situation was in the dark days at the end of 2010. I personally wasn't here, but I've heard all about it. At the end of March 2011, then what turned the situation around and gave a lot more certainty to the situation was when the central bank completed a robust and comprehensive assessment of the capital and liquidity needs of the domestic banks, both under a baseline and under a stringent 3-year stress scenario. And then the recapitalization was essentially completed shortly thereafter in July 2011, and the situation, was stabilized. And then the second key achievement I'd like to highlight is the downsizing and reorganization of the banking sector to address the excessive scale of the bank's assets and to focus the banks on serving the needs of the Irish economy. A major deleveraging of non-core assets has been implemented while avoiding fire sales. This process is largely completed, and banks' assets are more in line with the deposit base of the banks. And as a result, reliance on ECB funding has significantly decreased. The authorities have also reorganized the system, merging several institutions, and banks have reduced their costs, which is an important factor in rebuilding their profitability. And then also the ongoing liquidation of IBRC is further progress in the reorganization of the financial sector. So notwithstanding these achievements, significant challenges remain. The key question is how to get the financial sector to a point where it can step up and lend to credit-constrained but credit-worthy borrowers, and that's an important proviso there, because in a macroeconomic situation that is a crisis situation, there will be fewer of those entities around than in a booming situation. So, with 1/4 of banks' loans is not performing, and they incurred significant losses last year, even before provisions. but nevertheless prospects for 2013 are better. So the two key challenges are, first, making banks profitable so that they can build the capital needed to lend, and then second, resolving non-performing loans to reduce market uncertainty about bank health, which is needed to ensure access to funding at reasonable costs. And in the process, households and SMEs will be put on a more sustainable footing, which aids economic recovery. So what's the strategy to meet that challenge? Under the program, these issues are being addressed as follows. The establishment of a framework of residential mortgage resolution targets, reviewing consumer protection rules for mortgages in arrears, activating the new personal insolvency framework, and the updating of bank provisioning guidelines are all designed to promote finding sustainable solutions with the strategic goal of achieving durable reductions in arrears, with emphasis on durable. So now, however, it should be recognized that the case-by-case resolution of a large number of impaired loans is going to take time. It takes time to establish whether a borrower's new economic situation is temporary or permanent. Creditors need to properly determine their borrower's payment capacity before a permanent solution can be found. Because, after all, they need to preserve their scarce capital, which in many cases has been put there by the taxpayer. At the same time, a prolonged process is a drag on prospects for economic recovery. So on the one hand, you have to give it time, but on the other hand, you have to recognize that if you drag it out, this will slow down the recovery. And so we would therefore support largely completing this resolution process by the end of 2014. This won't be easy, as it implies facing difficult issues for the parties involved, but the temptation not to face these difficult issues should be resisted so that Ireland can break free from the legacies of the crisis. So now let me turn to the final part, which is fiscal achievements and challenges. And just by short background, although Ireland had a balanced headline budget going into the crisis, booming revenues masked a significant weakening in the underlying fiscal position. During the boom, public finances were directed towards improving social outcomes and expanding public services, and were also accompanied by structural tax cuts. Once the temporary flood of property-related revenues and other cyclical factors are stripped out, we estimate that the so-called structural primary surplus that Tony already talked about was around 10% of GDP in 2008. And together with the uncertainties around bank capital needs, this made for a very difficult starting point, which proved ultimately unsustainable as Ireland lost access to markets. So in light of these challenges, there are significant achievements. The crisis prompted a sharp fiscal course correction with substantial consolidation implemented in recent years. Over the last 5 years, we reckon that there were cumulative budget measures amounting to 15% of GDP. And this huge effort has helped to nearly close the structural primary deficit. It is really impressive that this major consolidation was achieved during an economic slump while preserving social cohesion. Without this achievement, Ireland would not have reached its current position of having market access at reasonable terms with a diversified investor base. That connection is very important. Still, challenges remain. Currently, the state still spends €1 billion every month more than it takes in, while the debt burden is at just over 120% of GDP. So confidence that Ireland will reduce that debt burden over time is needed for durable market access. Preserving that confidence will continue to be a high-wire act for the next few years, where further reductions in the fiscal deficit are needed, while at the same time returning to more solid and sustained growth. So what's the strategy? Since the outset of the program, the IMF team has urged a focus on steady, predictable budgetary adjustment as being least harmful to growth. To help protect the fragile economic recovery, we have repeatedly urged that if growth is weaker than expected, that additional measures should not be taken just to meet a particular target for the headline deficit as a share of GDP. So the emphasis has always been on the measures. We continue to support a total effort of 5.1 billion during 2014 and 15 to maintain the credibility that has been built up painstakingly over the last few years and help ensure durable market access. Under our current macroeconomic outlook, this scale of effort will also help reach the government's 3% of GDP target by 2015. So I better sum up because I'm there at the border of my allotted time. Ireland, time to wake up. I promised you I would give you a call. Ireland has faced formidable challenges of a massive banking crisis against the backdrop of broader distress in the euro area. It has tackled them admirably and has also built a sound framework to address some key remaining challenges. To overcome these challenges fully, the determination Ireland has displayed so far would need to be maintained while recognizing that further progress within the euro area on building a genuine monetary union is also important. So I hope that the lessons from the crisis and perhaps also the experience with the Troika, both good and bad, will help sustain the momentum for adjustment and reform going forward to ensure that Ireland truly recovers. Thank you very much.